Hello and welcome to Zee Commodity Capsule. A healthy rebound has been seen on the last trading day of the week. Of course, US markets are shut because of the Independence Day holiday, which is keeping their market closed on Friday as well. But there's a good rebound which has come across the board, be it precious metals, base metals, or for that matter, even energy, Brent crude for that matter. This has come on the back of decline in dollar index, which has dropped below 101 mark and hovering close to its 1 week lows. Gold prices have surged on Friday, was headed for its first weekly gain in 5 as investors dialed back the expectations of Federal Reserve interest rate hikes following softer than expected US jobs data. Gold prices have risen nearly 60 to 70 odd dollars and hovering close to the $4,200 an ounce mark. With this, it has risen to its highest level since June 23rd. Having said so, bullion was now on track for a weekly gain of about 2%, its first since May 25th, as weaker than expected non-farm payrolls and the private payroll data tempered the concerns around inflation and higher for longer interest rates. Silver prices also have managed to rise above 62. In fact, they are trading closer to $63 an ounce on Friday, hovering above 1 week high, extending gains from the previous session as weaker than expected US jobs data prompted the traders to scale back bets on Federal Reserve rate hikes. Aluminium prices have also managed to edge higher from its 4-month lows on Friday, supported by a weaker dollar and easing concerns over an imminent US interest rate hike. Aluminium on LME rose above $3,100 a metric ton. By the way, aluminium was trading below this critical level for last 4 trading sessions. Market was closely watching the macroeconomic conditions which offset pressure from announcements this week suggesting improved aluminium supply prospects. Citi said concerns over a rapid return of Middle East supply appeared overstated and supply is unlikely to arrive quickly enough to offset the demand growth. Meanwhile, let's take a look at the copper prices as well. They have managed to firm up. They have been very dull, lackluster, range bound between 13,300 and 13,400 odd dollars a ton for last 4 to 5 trading sessions. We have seen PMI data this week in United States showed factory activity in China growing at nearly 7 straight month in June. The Yangshan copper premium was also at its joint highest level since 2025. Let's take a look at oil prices as well, because they are holding the $72 mark as far as Brent crude prices are concerned. Before the long holiday weekend, we have seen oil prices hovering in a range with a slightly positive bias as very optimism held over the efforts to secure peace in Middle East between US and Iran. We have seen that in the prior session, the two benchmarks, that is Brent as well as WTI crude, hit their lowest level since before the US-Israeli war in Iran began in late February. Having said so, Brent for the week was up by just 0.35%, which happens to be the smallest weekly movement for in a couple of months. Why this has happened? Because the supply concerns are starting to ebb off. Saudi Arabia's crude exports have rebounded to about 90% of the pre-war levels, while in case of UAE, it has restored nearly all of its oil exports to the pre-war level by nearly 39 to 40 lakh barrels per day by routing their tankers through Strait of Hormuz. Malaysian palm oil prices fell slightly on Friday, on track for a second weekly decline pressured by anticipation of rising output and larger stocks. Palm oil on Bursa Malaysia dropped closer to 4,500 ringgits a metric ton, and for the week the contract has lost nearly 1 to 1.5%. We have also seen that crude palm futures are trading lower as market participants weigh a likely rise in the output that is expected to contribute to surge in the stocks. White sugar is where you need to keep your eye on globally, because the commodity is hovering close to its 9.5-month high, nearly $480 to $485 a metric ton. Raw sugar prices fell, although they are just off their 6-week high, which it had seen earlier this week around 15.25 cents a pound. The reason being that market sees Brazil center-south sugar output below 40 million tons in 26-27, nearly 2% less than the previous crop, saying that rains will reduce the sugar content in cane.